questions so far? We're good?
Nope, we're good.
Okay, perfect. All right, so let me show you here a typical private placement in an individual company. All right, Matthew, you're going to be a guinea pig today. I'm using you.
All right, sounds
So
good.
Matthew writes a check for whatever, $10,000 to ABC Mining. Okay, ABC Mining then issues a shares directly to Matthew. Matthew will deposit this in his brokerage account.
So these are shares like any other shares I own. Like it's your Google's mine. Not to say that, but it's a holding of mine, right?
That's right. That's right.
Yeah.
That's right.
Just like anything else. Okay.
There is a restriction on when you're entitled to sell them. They are simple shares like Google, like Microsoft, but there's a restriction, a legend, but that means you cannot sell until a specified date. That date is 120 days after closing.
That's right.
Okay.
So Matthew signs a sub-agreement, a subscription agreement, which is 100-page long, delineates the terms of the deal. And then once you sign it, send it back to the company. You're sending your funds. Then the company will issue shares. And then you're going to deposit those shares in your brokerage account. The following March, the mining company will issue tax slips, all right, which you will apply against your income, right? And I'll get to this a bit later on. I just want you to get the first part of the transaction. So this is pretty straightforward. The second part of the transaction, which is here. So this is where we come in, all right? So our client, so Matthew, will still buy those shares directly from the mining company, right? But there's a step two. Step two, Matthew will sell those shares right away to what we call a purchase and sell agreement, right? To a third-party buyer. This is super important. The third-party buyer cannot be related to Matthew or to the company. It needs to be an arm's length transaction, right? So once this is done, Matthew basically transfers shares to the custodian. So here at IA, and we'll walk you through our process internally. So Matthew transfers those shares to the custodian. So here at IA, then the custodian will deliver the shares at a third party. Could be a different brokerage firm. They will provide cash, so it's COD, cash to the custodian, us here at IA. And then the custodian will release the funds and deposit the funds into Matthew's account. So Matthew is no longer long the shares nor the warrants. He's just asked some cash from the transaction in the account.
And this is all seamless. It all goes behind the scenes, but it should be known no transaction occurs until all parties are lined up and there.
Yeah. So let me just take one step back. Matthew signs a sum agreement, buys shares directly from the mining company. Mining companies issue flow-through shares. Matthew deposits those. Well, Matthew, we are handling this stuff, but Matthew deposits shares in his brokerage account. Then there's a purchase-sell agreement, selling the shares to a third party. The custodian is releasing the shares only upon making sure that the funds are available. So there's no risk of Matthew being long the shares and be stuck in the transaction. No risk whatsoever.
So I paid $10,000 on day one.
Yep.
And then I sold these shares, and it's the transfers facilitated through the custodian. And then how much was the check that I received back for selling the shares?
I'll get back to this. I'll expand this a bit later on. Okay.
Sounds good.
But it's just so you know, on day one, when you wrote the check for the shares, it's also on day one when you're going to receive back the money from the sale of the shares. It's all
on the same day.
Time. Yeah. I think there's a question in here.
Yeah. So Lauren asking, this strategy is for those in the 45% plus tax bracket.
Well, the way I'll explain it to you, every deal will be different. And we only want to do deals that are valuable and profitable for our clients, like you would be, Lauria. And so if the deal terms are making it such that it could even be working for someone in a 43% tax bracket, that's fine. But if it's not profitable, we don't want to do it for anybody. We want the person to be having a really great experience, seamless, profitable, and making a difference for them.
Yeah, and as part of, if I can add to this, so as part of our service, we are evaluating the needs of every single client based on their own particular situation. And most often than not, we get the accountant involved to make sure we do the right math according to his situation, and we calculate how much would make sense for that individual. We try to go optimal, and then from there, that's going to be up to the client to decide how much they want to buy. Okay, but I'll walk you through the process a bit later. So, Nick, could you please expand on?
One second, there's another question. What's the advantage to the custodian? Really, what's the advantage to the arm's length buyer? So I can expand on that. When Matthew's buying shares at, for example, at $1, he will be selling them at a discounted price, which would be determined in advance of any transaction taking place. The end buyer, that arm's length buyer, is buying these shares at a discount, and they're okay with the risk associated with these shares, the hold period, and the fact that these are junior exploration companies. They might make a large profit. That's the advantage to them. They're on the speculative side of this transaction.
Yeah. So you might, I don't want to put words in your mouth, but you might think who's going to buy shares on the secondary, if you will, while they can buy shares on the primary, get the tax breaks. While most often than not, these are companies or individuals that cannot use the tax break. So as an example, it could be a competitor, another mining company that wants to purchase an ownership in that particular company. It could be a family office that's looking to diversify their portfolio. It could be a speculator. It could be a merchant bank. Most often, there's a lot of Europeans and Australians who are participating in this. So they cannot, obviously, as foreigner, use the tax break. Okay, Nick, can you expand, please, on what's our approval process here from the day that we strike a deal with the company?
Sure. So, why don't you go to the next slide first, Terry?
Oh, I'm sorry, guys.